to continue, I'm going to give my trading strategy. Here's an example of a trade that I did today. Right here, you see a big push coming up in the morning, and you have this drawback. Now, right here, you have fair value gap based on these three candles. Now, if you don't know what a fair value gap is, there are tons and tons of videos on that. Basically, it's the gap between the wicks of 3 consecutive candles. That's uh, that's a short of an explanation. If you need a better explanation, there are tons of videos. And then it came back down and closed within this. It was a trade that I did early in the morning. So one thing I've noticed is that large institutions, they tend to make their trades in the morning as well. They will hunt for stop losses. So that's something you have to be a little bit more careful with. Now, gratefully, I had my stop loss probably right about here for this trade, and so I was well out of reach. But on other trades, sometimes the stop loss does get hit if you're in the morning, just because it's very volatile. Now, this is something that I saw happening, and it the candle after that was a green candle, showing that it was going to return to the upside. Now, I entered right here in the middle of that green circle, if you can see that. Came down, it closed inside that fair value gap area, and then that is where I saw, hey, it is going to return to the upside. Now, there are some things that I look for. Number one is this fair value gap large? Like, as you can see right here at the end, this is a very small fair value gap. Now, the likelihood of something closing in there is not a lot, or something closing above it is very slim, and so I try to avoid those. The larger, the better. I saw this come down. The bottom of this candle, of the candle block, not the wick, it closed inside of this fair value gap, right around the middle, which is exactly what I look for. Now, something that this trade did, and the reason why you can tell by this arrow here, I bought here and I sold up here. I had this big candle come down, and it's not like I got scared, but when I came up in here, I kind of just realized, like, hey, this might be consolidating a little bit, and so I didn't want to be caught in a consolidation zone where I was just starting to hope that, oh, okay, maybe I can just get a little bit. And so I was going for a green day, and I would rather have a green day than risk everything for a red day. And so it was enough to cover another loss that I had this week, and so I just called it a day. Which I probably could have stayed in it a little bit longer, but as you can tell, this wouldn't have hit my take profit before it turned around and did a change of character, a change of structure. And then just to clarify with my strategy, my stop loss, I usually put between 1 and 1.5% of my capital. Now, granted, this is only a $3,000 account, just because I am doing this not for big gains. I'm doing it mostly just for learning the strategy and making sure that I'm accurately predicting the market. My take profit, I usually do a 1 to 3 risk reward ratio. Now, most people they prefer a 1 to 2. In this case, that